Hey, how's it going, guys? Welcome back to another trade recap. Today is October 9th. We are approximately 20 some days, no, less. Birthday's on 25th, so do the math. I can't do the math right now. Nice little trade recap. Today we took one of the biggest W's I've ever taken in my trading days, at least paper trading. Real money is a different story. Paper trading so far has been very, very good to me. I like how I can take it very slowly. I can really risk whatever I want to risk, and really understanding the options contract and how they expire and how the contracts lose value over time when you're in drawdown. That's been really fun. Just the profits right now, I believe we've invested $500 before October, and we are now sitting at 12 grand or something. Um, so very exciting. Load to share on the weekend slash Monday analysis. There's a lot of stuff going on. I will show you guys what that's about. Just let you guys know, let's go ahead and open Forex Factory real quick so you guys can see the news. Today was a bank holiday. We still traded though because today was Columbus Day, and I guess it trades during Columbus Day. You know, it's whatever. Tuesday we have absolutely nothing to watch out for USD, DXY, anything like that for red folders. There is probably still news. I would watch out for the war that's happening in Israel. I would really watch out for news like that. So I'm gonna be risky on Tuesday and watch for news like that. Wednesday, obviously, we see that we have Wednesday's a big one maybe. 8:30 we have core PPI, and then we also have PPI, and then at 2 p.m. we have FOMC meetings, FOMC minutes. And then Thursday we have the big boy Thursday, and this is gonna shape up the whole week, take out a lot of fucking levels. It is core CPI, CPI monthly, and CPI yearly, and unemployment claims. I mean, that is one, two, three, four catalysts that will just take us out. So, obviously, with every big news event like this, right, we are saying to ourselves, at what point and where does price want to come back to, retrace back into, where are we going higher, where are we going lower? So, as we have noted before, we had this big weekly fair value gap right here that was filled, and then we traded into this displacement balanced price range down here, probably on the daily. So that was traded right through. I mean, it doesn't show on the daily, but I bet on the 4 hour, 3 hour, whatever, you can see the fair value gap worked on bullish, and then was created bearish, and then was traded right through bullish. So it created that balanced price range, and price traded off. But that was yesterday's trade. Today's trade, there's a lot going on, and I'll explain it. You just have to sit tight with me. So yesterday, Monday, yes. Well, we didn't really trade yesterday. My bad. I'm sorry. We didn't trade yesterday. Well, we did an analysis. I can't remember when we did the analysis. Let's move on to the 4 hour. I'm not gonna lie. Yeah, this OT is like killing me, bro. I gotta remove all this. This is it's very annoying. Okay. Yeah, I remember. I'm pretty sure I have my notes on that too. So a few things to note on the 4 hour. I like to really chart things out on the 4 hour and predict everything on the 4 hour. Can my notes load so I can show you guys what's going on? Or yeah, just stay white at this point. Just, yeah, don't even load. Yeah, no, good one. Yeah, no, keep loading. Go for it. Yeah. Okay, let's scroll all the way down. Let's see, right up here. Okay, so the 8th should be up here. Okay, so we had SPX on the 4 hour on the 8th. So again, this is the same chart, right? It's just right here before. We have, can I put it like this? Yeah, right here. Perfect. So you can see actually the side-by-side comparison of what I'm trying to show you right here. And we'll actually put it like down so it's like perfectly even. Perfect. Look at this. I'm the best teacher out here, bro. Everything's lines up. So I didn't change anything, as you notice, except that I deleted the OT. But you look at this fair value gap, right? We obviously price ran up, okay, and it tapped into this monthly fair value gap right here. And after we tapped into here, it created buy side liquidity, which was our first draw for when market opened. And then our final and biggest draw would be this bigger time frame liquidity up here, and even this, but this is what I was hoping for price to get and at least fill this fair value gap, because obviously we've tapped into this fair value gap. We haven't traded into it, but the move that would be most likely to happen is that, again, this is exactly what happened. We would bounce off some kind of level, some fair value gap. I found a breaker block. Obviously, the swing low to the swing high OTE levels, we'd bounce that off. Multiple P arrays, we're trading above the fair value gap, the weekly fair value gap. The next draw would be this high right here. And obviously, if we trade up to this high, do we break it or do we kind of trade into it, consolidate, and then break out? Anyways, the move that we want to catch is this move up, and that's exactly what we did. And the target is the hard part. Do we target this? Obviously we do, but do we target this higher high? Because we don't know if price will want to reach and fill that monthly fair value gap right away, right? Obviously today it did, okay? Let's take a look at DXY. So DXY was actually a perfect setup. I mean, this is just beautiful. I even had the arrows predicted and all that for, a couple days. I had this nice non-farm payroll move up for the dollar. So obviously SPX went down. We reaches all the way back. I don't really know what these levels are for. I know they're a purpose right now. There's order blocks and fair value gaps, but I haven't been on DXY for a long time. We have this gap up, move up, move up, move up. We have this breaker block before non-farm payroll. Obviously, this breaker block will act as a bullish standby or P array for price to come up pre-market. Then we have our fib levels from the swing high, swing low. Fib levels get hit. Obviously, another PD array. Inversion fair value gap gets used, gets traded through. And then let's just take a look at DXY. As you can see from our notes, this lines up actually quite perfectly as predicted. We kind of trade above here, boom, and then probably hit a fair value gap here, high time frame or low time frame fair value gap, and trade all the way back down under this breaker block. And then I believe we hit, yes, this gap right here, which is the volume imbalance gap. Just the gap that we create from obviously the Friday to this Monday or Sunday, I guess. The new week gap. That gets traded right above, boom, gets hit, and then probably hit the consequent encroachment of this nice little down move right about, probably. I mean, OT should be right there. Yeah, we hit that move. Hit this, and we trade all the way down to this. I guess it was liquidity, I guess. I'm not too sure what that level was, but the idea was to obviously trade all the way down to this liquidity down here. Unfortunately, we did not get that today, but we did get this initial move down, and I am persistent that tomorrow we will grab this liquidity. I just don't know if this liquidity right here is strong enough for us to come down and to actually reverse all the way back and really create a big move. I'm trying to figure out what I marked this for. I'm actually not too sure. It's probably like a 30-minute liquidity. Yeah, probably down here. So there's some liquidity up here. Oh, was it it might have been a order block. It might have been an order block, actually. Now thinking about it, 1 hour. Yeah, it was an order block. That's what it was. No, it wasn't. Wait, I'm stupid. What am I doing? No, yeah, it was an order block. Yeah, it's this right here. What am I doing? Wait, I don't have anything saved. Oh, my bad, guys. Hold on. Just send this up. There we go. That was the order block. There we go. So we traded down to this order block. Tomorrow we'll see DXY, or I would like to see DXY. Oh, and this is these level. Yeah, consequent encroachment of this wick. Yeah. Fair value gap of this wick. So possibly take out this sell side imbalance or sell side liquidity down here in pre-market, aftermarket, pre-market. And then I wanted to see it trade lower into this area, fair value gap, possibly maybe under. And if possible, if it really wants that, we could trade down to this sell side liquidity down here, where we not only have, pretty sure we have some fair value gaps up here to resist that. But that's that for DXY. SPX, let's just go back up here. We had the draw, yes. Let's go ahead and show you the trade, right? Yeah, so the trade. So this is what we took. We were on the 5 minute, right? I believe. Yeah, somewhere up here. Okay. So, let's just mark our time frame. 9:30. Where's the 9:30 open? There it is. So that's 9:30 open. Everything before is pre-market. As I want you to notice on the 5 minute, we have obviously this 1 hour breaker block. Huge breaker block, not only get tapped once, twice, and then 3 times. 3 times today, Monday at 3 a.m. It bounces back up, right? Note that on the the Dow Jones, we had a very, very aggressive down move because of the what's happening in the East with Israel. But SPX managed to stay bullish and actually trade all the way up. We traded a nice little market structure shift here and then created another one, and then another one up here, and then another one up here. So multiple market structure shifts, which was obviously traded all the way. I really don't know why it's fucking doing that. Really nice bullish day, right? We start off at 5 a.m. kind of moving down, up, down, whatever. I don't really care about this part. All I care is that it's respecting this breaker block right here and it's not trading down into it, which means that we are probably entering a level above these highs and obviously probably not wanting to sweep this anytime soon. So what does that tell me? That when market opens, we're going to trade higher. Obviously we do. We get a nice little pump. Market open is known for its pump, either down or up. Today we had up. Now, why did it stop there? Don't ask me. I don't know. I mean, maybe it was because of, we could probably draw a fib level from this low to this candle, like right here, and there's a perfect OT like there. Maybe if the fib can help us. Okay, the fib is completely out of the question. Range, no. Mean threshold, no. Okay, so it's the OT. So OT, okay. This actually is like quite perfectly. I took the NFP, the NFP body, straight body on the 5 minute, and this price action is beautiful. It hit right on the 0.79 OT level right here and did a nice little reversal. Obviously, where did it go? Didn't go down to OT, but where it did go, and this is where I was looking to take my entry, right? We did this. We took this swing low to this swing high, right? That market open created. And guess what we have here? We have this OT level on the 5 minute. I love to take my entries on the 5 minute like this because it's really, I think it's pretty, what's called, what the fuck? Oh my God. Anyways, yeah, OT is pretty accurate. Now, obviously here, I can't take a trade off of this. So what I do is when I mark my OT levels, I know that price wants to come down in this region, right? I'll just mark it out for you guys so you guys can understand this region from the 0.6 all the way to the 0.79. I don't know every time where price is going to want to come down to these levels exactly. What I do know is that there's possibly a fair value gap, an order block, some kind of PD array that will establish some kind of bullish resistance or bearish resistance. So what I like to do is on the 5-minute, on the 15-minute, I go to the 15-minute every time to draw my OT or 5-minute OT. But then I go back to the 15-minute and I say, is there a fair value gap that we possibly come back into that's in this range? So again, I'm looking for a fair value gap that's from here to here in this gray zone. Is there a fair value gap? I'm going to delete this real quick. Is there? Yes, I see one right now. I see a very strong one, and it's from this candle's high to this candle's low right here. I'll change the colors so you guys can see. Change to the blue right here. Boom. Do you guys see that? So that's our 15-minute order block, or fair value gap, my bad. Okay. So at the moment, I'm like, I need to take an entry inside this fair value gap. But then you go down to the lower time frames on the 5-minute, right? Because if you want to refine your entry, you need to refine it very, very well, and price is going to hit a certain level. So my next step was, okay, is there a 5-minute fair value gap here that we're missing or anything like that? And what you can actually notice on the, I'm pretty sure it's on the 15-minute too. It is a balanced price range. So from this fair value gap, this bearish here, boom, boom. We have this beautiful balanced price range. I'm going to mark it in orange. Okay. This fair value gap on the 15-minute, this candle's low to this candle's high, got traded right through it. Balanced price range. 5-minute, and you really need to go on the 5-minute to see the better spot to actually enter off. As you can see, price traded right down to it, didn't touch it, but got really close, didn't it? It almost got to the tick, but it got close. So just an idea. And then what you can do is you can say, okay, well, in this balanced price range, is there another fair value gap that is also used as balanced price range? And you can see that, yes, indeed, we have this candle's low right here and this candle's high. And this is also created, there's so much going on. Also used as a fair value gap. I'm going to change this big one as like freaking pink or some shit. No, that's too big. Gray. Okay. So now you have all these different fair value gaps. Which one do you enter off? Wait, like what the fuck is going on? You have OT levels and you have multiple fair value gaps in the same area as this OT level and as it's 0.79. The strategy I trade, and it's not even a strategy, it's just it's sentiment, it's what you're feeling, and it's how you know price action well, is there is multiple fair value gaps aligning up in the same area near the 0.705 OTE. Even if you go on the 3-minute or 2-minute or 1 minute or 30 seconds, I don't know what time frame you guys would be using, but you can see that the ones that are lining up, and we're going to pay attention to this orange one and this blue one, is the top of it it's closer to the zone of 0.705. That means that price is most likely, not going to, but most likely going to trade into the zone and either reverse on the zone or trade in that zone or trade through that zone. So all you have to do now is you have to use ICT's method. It's time and patience, or price and patience, right? So you wait. 9:30 opens, it trades, hits the OT level as we said. Trades. We don't care about this price action. You can't trade this. This is for scalpers. Boom, 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 boom. You know you're bullish. When does price come back up? Again, draw the OT, draw the fair value gaps, understand where price wants to go, get a clear idea of where it needs to go. Okay? Now, it's not as easy because you might just enter off the tick. No, I don't do that. I wait for a breaker structure. Okay. So where's the breaker structure here? And this is like a very small breaker structure for me, but obviously my breaker structure here would have been this this high right here that gets taken out and gets traded right through. That to me just shows that we're going back up. Now, obviously, you could argue that, there's a fair value gap right here and that all it's doing is it's just reacting off of this, right? Okay, I get it, but that's why you have your entry right here. You probably enter off right there, but that's why you have your stop loss like right here. Actually, where did I put it? Right here? Yeah, right here. So I have my stop loss at 0.705 and obviously my take profit, whatever. But I want you to understand that if you did think that price was going to come back down, then you shouldn't have entered the trade, right? If it's not a high probability setup and in a high probability trade, you shouldn't have taken the trade in the first place. You should have watched how it went pretend that you're taking the trade and just watch price action, right? That's how you would have done it. You wouldn't have taken in the trade if you knew that it was going to go bad. So yes, it hits this fair value gap. I completely agree. Trades down, it closes right on the candle's high, right? The candle's this candle's high is 4286, or my bad, 4289.6, and this candle's body close is where's the close? 4289.6. That's like on the dot. That's the exact level of this fair value gap. It closes right above. And this open candle, its open price is 4289.6. If that doesn't tell you that's algorithmic and institutional, I don't know what is. And from there, the rest is history. You know, you're in drawdown for maybe 6 minutes, maybe less, and then you're back to profit, and your contract is not going to kill you, right? Tight stop loss. If it goes past my stop loss, even if price closed below the 0.662, I would be out because there's no reason for it to come down. There's no reason for it to come and grab this liquidity as it just bounced off. Even if you look on the 5-minute, it's a doji. 15-minute, it's a doji. You know, like it's just this on the 15-minute is clear. It's clear. Now, again, where you target is what you decide, but what I targeted first was this draw. And then what I had was I had 5 contracts, and in those 5 contracts, I had 1 runner. So 4 concrete contracts, concrete contracts, and I had 1 runner, which was left all the way to this monthly fair value gap high. Okay. Disclaimer, you will not trade like this every single day. And I hope you know, I spent hours yesterday. I stayed up until 12 marking my charts and understanding ICT terms. I spent hours analyzing my charts yesterday for this to happen today. And today, I didn't have time to watch this fucking play out. I entered the position pretty much in the middle of class like I do every day. I had everything set up. And at lunch, after lunch, I open my computer. I'm pretty sure I'm in studio art. I open my phone. I'm up $4,000. Boom. I stop all positions. I leave 1 runner. You know, $4,000 and 500, whatever. And that's that. But I basically caught the whole move. To me, I caught the whole move. And you're not gonna catch this every day because there's not gonna be a big move every single day, right? But the fact that I knew what I was doing, I knew that I had my bias right, and I knew that I had my analysis. I hope I had it right. That to me that's good. That means I'm improving. I'm just gonna take a photo of this for my notes real quick. I know it's the middle of video, but I do want this to be highlighted in my notes. I'm just gonna put that there. Yeah, like I said, like you can see the dedication here. Like we have like this was written. I can't put a time span, but I did this at school right here. Like this right here, you can read this if you want, but this is my analysis of what the trade looked like, right? I'm not reading this off a script. Trust me, this is me just saying this, but this is what I had marked out. This is my trade, right? Obviously during the video, I refined some things, right? But this is what I had, wrote down. This was my trade. This was the OTE. There's a bunch of levels you might not understand, but to me it makes sense. To you might not, right? Notes everywhere, man. Notes everywhere, backtesting, just a little sneak peek. There's a bunch. I do a bunch. Like, don't think that this is just super easy and you can just get into it and make money, dude. I'm not even making real money at this point. I'm not. It's all paper trading. And yeah, maybe it's fun to make me to make fun of me for doing paper trading, but it pays off in the long run. And if you're listening to this, it pays off in the long run because that real money that were lost doing paper trading, those accounts I've blown on paper trading, right? Because I take it so seriously. Trust me, in the real world, I'd probably drop out of high school because I have no money to support anything. I have lost more money that I could ever make in paper trading. So imagine if that was real money. Paper trading saved my life, right? When I started trading, I want you to understand this. When I started trading, I started with trading with real money, with $100, right? I traded options, which was a huge mistake at that time because I didn't have a clear understanding of what a stock was. You know what I mean? So I was thrown into the big world right away. Didn't understand anything. Didn't watch anything. Didn't even understand what a stock market was. And I lost all that money. A lot of money. I lost a lot of money. But did I give up? Did I quit? Did I just say, hey, Dad, I lost X amount of dollars. Can I just have it back in my bank account and we're just going to pretend like nothing happened? No. No, I kept going. I worked every day, every night after my homework. I would go on the charts. I would watch a video or two about this and that. I would take notes on this. If I didn't know a term, I would write it down. I'd research it later. I'd understand what that term meant. If something was confusing, I'd look it up. I'd research it, and I'd try it in the charts. Every day, if I'm not trading, I'm looking at the charts. If I'm not looking at the charts, I'm trading. I'm doing both every single day. The price action is there. The levels are there. There is multiple strategies for you to trade, for you to find out whatever you like, whatever you don't like. If something works for me, it might not work for you. You might not understand what I understand, and I might not understand what you understand, and that's fine. But you gotta understand, man, it is worth it in the long run if you stick to it and you're dedicated to it. If I were to put 50% of my effort right now into trading and focus 50% more on academics, this, that, this, I would probably not be profitable in the next 3 months. I'll say it right now. But if I keep going like the way I'm doing, every single day I take notes, every single day I take videos, every single day I keep pushing myself to go further and to learn more and to do better, then I will be profitable in the next 3 months. I will be there. And profitable means $1 is more. If I put $100 in my account, profitability means that I make $1 out of that 100. That's being profitable. Not making $100,000. $1 that you make or more is being profitable. That's how you need to think about it. You put $50 in your account. Being profitable doesn't mean that you have 50,000. Being profitable means that you have more than you put in. That's what being profitable is. Obviously, keeping that profitability is something else. That's a whole nother risk management type shit, but that's it. Goodbye.